Okay, problem 9.6. We're given the trial balance and we're to go through the financial statements to complete the worksheet, the income statement, the statement of changes in owner's equity, and the balance sheet. So we begin by extending across the columns for our asset accounts with debit balances, cash and bank accounts receivables, our supplies, our office equipment, our office furniture, our car wash equipment. We have no calculations to make. All we're doing is extending debit to debit, credit to credit, assets, liabilities, and owner's equity to the balance sheet. So we extend accounts payable and the owner's capital to the credit side of our balance sheet, and the last balance sheet item would be the withdrawals, which has a normal debit balance. For now, we're doing nothing with income summary. So for our income statement sections, we start with our revenues, our credit balances. We extend across the column. Revenue, we have 3: wash, wax, and interior detailing. And then we extend all our debits: advertising expense, equipment rental expense, maintenance expense, rent, and utilities expenses. Once we do that, we total our columns. And the unique relationship between the debits and credits in the income statement and the balance sheet are temporary and permanent accounts. Those debit and credit columns will be off by the same amount. When I debit my income statement and credit my balance sheet, I know I have net income. When I credit my income statement and debit my balance sheet, I know I have net loss. So the difference between my income statement, debit and credit, and my balance sheet, debit and credit, is $8,764. That brings my income statement to balance, debits and credits, and my balance sheet, debit and credits, to balance. Remember, the two sets don't have to be equal, meaning the income statement amounts do not have to equal the balance sheet amounts, but the debit and credits for each section must equal. So I have my single rule to show my computations, and I finish with a double rule signifying net income of $8,764. Okay, I then go to my income statement. Okay, so this is for the who, the what, and the when, the Hot Suds Car Wash. My income statement is for the quarter ended September 30th. So again, we already know what net income is. I know I should have $8,764 as net income. I list all my revenue individually in the first column, and the total for my revenue and the total expenses in the second column. So I have total revenues of $20,270. I have total expenses $11,506. Remember, single ruling after the individual amounts in the first column, bringing the total into the second column. And I have net income of $8,764 with a double rule signifying that I'm finished. Now, that number is going to be important because we need to add that $8,764 to our owner's capital. So our second statement is the statement of changes in owner's equity. It's the Hot Suds Car Wash. The name of the statement, the what, and the when is for the quarter ended. It's for a period of time. Because we had no additional investments, we're making all our computations in the second column, so we have to go back to our beginning capital on July 1st, $23,845. I add my net income. That is the same amount, okay, from the worksheet, from the income statement. I make the computation to add net income. I back out or subtract any owner withdrawals, the $1,500, and my ending capital is now $31,109. That number is again going to be important. That flows into the balance sheet. So that is the number that's going to bring my assets equaling liabilities plus owner's equity together in our balance sheet. So the who, the what, and the when, Hot Suds Car Wash. The balance sheet, the name of the statement, and it's as of a date and time, so September 30th. I'm listing all my assets in the first column. These numbers are right from the worksheet. They have not changed, or your general ledger. So first column, I list all my assets. I have a single rule, and after to total my assets, I double rule. I have total assets equal liabilities plus owner's equity, so I list my liabilities The total is in the second column, and the number that's going to bring everything together. I have a new, what I found in the Hot Suds, or what I found for the Hot Suds car wash owner, Regina Delgado. Okay, the $31,109 makes my assets equal liabilities plus owner's equity. So when those two numbers are in balance, when your math is correct, you know that your problem is right. Okay, and the return on sales for the period is my net income. Okay, the $8,764 divided by my total revenue. Okay, the $20,270. Okay, 43.24%. Of that total amount of sales, I'm taking home about 43% in net income. That's very good. Okay, but we want to make sure in our balance sheet that our assets equal our liabilities plus owner's equity. The new owner's capital should make that happen.